Omotola Abimbola is an investment analyst, is joining us from Afrinvest in Ikoyi, Lagos. Omotola, good morning. Thanks for coming through. We appreciate your time.
Good morning, boss, and thanks for having me.
Yes, sometimes we spend so much time talking about the challenges we have locally as far as the market's concerned, when sometimes we tend to forget there are global headwinds out there pushing things backwards for us. How much of these are affecting financial assets? Let's start from the FX, where we opened the doors and the windows as the clamor was before June, but since we've seen trickles of dollar inflow.
You're right, boss. There are a number of global headwinds affecting not just Nigeria, but emerging markets and developing countries in general. But for Nigeria, the factors actually affecting our FX rates and the investor confidence in the economy is more of domestic than global. But from the global scene, looking ahead in the next couple of months, there are a number of headwinds we should expect to continue to impact emerging market fund flow. And key among them is the likely possibility of the US Fed hiking its federal fund rate, probably in December. And what that will do is that it's going to squeeze dollar liquidity in the global markets. We'll likely see the dollar strengthening against a host of other currencies. And of course, we know that both the sovereign and the corporate borrowers in Nigeria have significant exposure to dollar-denominated liability. So when you see interest rates going up in the global economy, what's going to happen is that for those corporates and sovereigns to refinance their existing liability, it's going to cost a lot more. Nigeria is planning to go to the Eurobond markets later this year to try and probably raise as much as $1 billion. And we think that if you are able to get the issue done before the end of the year, the atmosphere may still be very, very comfortable for us because we still have a number of other major central banks easing, such as the ECB, the Bank of Japan, and the likes. So we should probably see a very successful issuance, depending on the metric you are looking at. Subscription should be very, very healthy, although we may likely see an uptick in the issuance rate, probably in the range of 9% to 9.5%, which we have seen some other African issuers, raise fund in the Eurobond markets of recent.
Tola, do you think foreign investors, let's get you to speak to the side of the Eurobond flotation. The initial figure was $1 billion. We started the week with some market hearsay that perhaps it will be lower than that, perhaps $500 million. Do you think we have what it takes? Foreign investors didn't come in because we opened the FX window, we floated the FX market. And so do you think the appetite is there to buy our Eurobond? Do you think Nigeria has what it takes to give the kind of rates that international investors would want to have on lending us this money?
Well, for the Eurobond issuance, we think that, if the issuance will be less than $1 billion, probably $500 million, we should still see an oversubscription. Because when you compare that to the $750 million issued by Ghana just a couple of weeks back, I think the issuance was done at around 9.25%, which is still very, very high. I mean, compared to what other countries like Saudi Arabia are issuing their bond. So what might likely see that investors will be pricing the risk of Nigeria's macroeconomic fundamentals becoming weaker, in the future. So you probably see the foreign investors pricing the bond maybe at a very high yield. But despite that, the issuance should still be very, very oversubscribed because looking at the global economy right now, there is still a lot of appetite for high yield emerging markets and developing markets Eurobonds because of the low risk environments globally. So from that perspective, we should see a very successful issuance. But of course, it's going to come at a very, very high yield.
So the Buhari's administration wants a fresh $30 billion loans. I'm not sure a dime out of that money is coming to Broad Street, as it were, where you folks operate. So are you guys eyeing this kind of money, saying, oh my God, wish we have this in treasuries, in bonds, in stocks, and other financial assets, as it were? Do you think if we get this $30 billion, do you think the market will benefit one way or the other?
Yes, certainly, because if you look at the data now, Nigeria is facing an external sector crisis. We're having a current account deficit in the region of between 2% and 3% of GDP that needs to be funded. And for you to fund that current account deficit, you need foreign exchange liquidity to do that. And beyond that, the federal government is facing a very massive fiscal deficit due to the decline in oil prices at first, and more recently, the decline in crude oil production, which fell to less than 1.5 billion barrels per day. So, of course, for us to fund that fiscal deficit, we're going to have to engage in borrowings. And as it is now, the federal government has already maxed out on the ability, on the stipulated amount to be raised from domestic borrowing. From the data that we gathered, the federal government was meant to raise around 900 billion naira in terms of from domestic capital market to fund the 2016 budget. But right now, we already exceeded a trillion naira in domestic borrowing. So the other avenue for them to raise money to fund that fiscal deficit has to come from foreign sources, which is why we think that if they're able to get some foreign borrowings denominated in foreign currency, that's going to help them to fund the fiscal deficit. That's going to improve sentiment for the Nigerian market. We may likely see the FX liquidity crunch slightly subsiding. But of course, for us to have a sustainable FX market and stability in FX rates, the central bank still needs to look at how the current structure of the FX market is. Because, of course, a couple of months back, they announced that we are now in a very flexible FX regime. But right now, it appears as if we are still back at the hard peg of 305 naira to $1 US. So even for us to be able to access this fund from multilateral lenders such as the IMF, such as the World Bank and AFDB and co, they're going to demand for lots of conditionalities. And one of them, which we think is very, very important right now, is FX market flexibility. So it's a very important reform, and not doing it now just amounts to kicking the can down the road. It's going to happen sooner or later.
Okay, Tola Abimbola, we thank you very much for kicking the can up the road, and we'll kick it higher next week when we get some time to get together to have your views. Thank you very much. Do have a great weekend. Omotola Abimbola, investment analyst at Afrinvest. We're back after the break. Stick around.